why Tesla is headed to $10 trillion or more over the next decade, or less. I'll be running through a series of charts by James Stevenson, an invaluable asset to the Tesla Twitter community over at @ICannot_enough. James has a series of fantastic charts showing Tesla's phenomenal growth from every angle you can imagine. These charts not only show Tesla's phenomenal growth to date, but many also feature projections, and I'll compare and contrast where James is at with my own assumptions for my Tesla valuation model. So let's get into the video. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. So first chart, Tesla's share of the total US automotive market by quarter. Now this isn't electric vehicles, this is vehicles period. Chart starts here in Q1 of 2017. There's a very clear trend. Tesla comprising 0.3% of the US auto market in the first quarter of 2017. Less than half a decade later, Tesla now 3.4% in Q4 of 2021. Tesla has 10x their market share in the US in less than half a decade. Play along at home here, everyone except the dum-dums of Tesla Q should be able to do the math here. What if Tesla approximately 10x's their market share in the US again over the next half a decade? That would put them at approximately a 30% share of the total US market. Is this realistic? I believe so. Time will tell. This chart isn't just about Tesla's phenomenal growth in the United States. It's also about the EV tax credits. We can see here along the bottom, the $7,500 EV tax credit was available for the first year or two. Credit then halved to $3,750, then halved again to $1,875. And since the tax credit was completely phased out, Tesla's sales and percent of market share continued to climb dramatically. There was a time that the narrative, especially from the Tesla short sellers, also short on brain cells, suggested that as soon as the EV tax credit halved, people would stop buying Tesla vehicles. And if that didn't happen, well, obviously by the time it's phased out completely, no one's going to want to buy a Tesla because they can buy a competing vehicle. You know, the competition that's coming all over itself prematurely? That would be effectively $7,500 cheaper to buy. Clearly, the EV tax credit not really having much of an impact on Tesla's vehicle sales over the long term. The trend still up. Next, we have trailing 12-month data for Tesla's financials. Why trailing 12 months? Pretty simple. It just smooths out the lumpiness. For those of you who don't know, the automotive business, particularly in the US, is very lumpy, very seasonal. Q4 generally is enormous versus Q1. The trailing 12 months just smooths out the data and helps to make the trend much clearer. This, of course, is something that many of the Tesla Q dum-dums don't seem to understand. Even if we didn't look at any of the labels here and just looked at the general trend, seems pretty clear, right? But let's run through these things in a little bit more detail. Just for the record, the Q4 2021 data is currently an estimate from James. He'll probably be pretty close to the money. Get it? Money? Because that was bad. Anyway, first up, Tesla's trailing 12-month gross profit. Pretty clear trend here, to the moon. But more interestingly, we're really starting to see operating leverage come into play. Tesla's gross profit over the trailing 12 months has not only started to increase, but increase exponentially. Look at the sharp move on that curve there. We have a fairly similar trend here with trailing 12-month adjusted EBITDA. Negative in early 2018, then turning positive, and now extremely positive. Tesla's likely to be at around $12 billion of annualized EBITDA in Q4 2021, and that's before Austin and Berlin open up. Same trend with non-GAAP earnings, negative in 2018, fairly neutral in 2019, starting to increase quite dramatically in 2020, and now well on its way to the moon. By the way, after the moon comes Mars, so just keep that in mind. We're just getting started. Finally, GAAP earnings, same trend. In short, to sum these 4 charts up, the direction, the trend, very clear. Tesla printing ridiculous amounts of money, starting to increase exponentially, and it's still early days. Possibly my favorite chart of the entire series, Tesla's quarterly revenue in millions, broken down by year and quarter. 2009, 10, 11, and 12 specs, we can barely see them on this chart. 2013, Tesla a little over $2 billion in annual revenue, and by 2018, more than a 10x, over $21 billion in revenue. Not only that, we can see Q1, the seasonally weakest quarter for Tesla and most automotive businesses alone in 2018, bigger than Tesla's entire 2013. The first 2 quarters of 2018, bigger than 2015, and on and on and on. It's really worth taking a moment to let this sink in visually to try and understand exactly what's happening. If we take Q4 2020, here's a little measuring hack for any of the Mac nerds. If you're not familiar with this trick, do the screenshot, press the space bar, drag it. we can actually see that Tesla's Q4 in 2021 massively above their 2017 for the full year, and not that far off the entire year of 2018. The rate of growth here is truly phenomenal. Tesla's 2021 revenue for the full year is approximately equal to both 2019 and 2020 combined. You'd be hard pressed to find a single company that isn't growing from $0 to $1 to $2 to $4 of revenue, growing even close to this rate. And Tesla is in the tens upon tens of billions of dollars of annual revenue. This is absolutely bananas. This is why the stock market is willing to award such high multiples to Tesla stock. It's the growth. It's insane. And again, I cannot underscore enough. See what I need. This, my jokes are bad. Cannot underscore enough how important it is to understand Austin and Berlin have not yet commenced production nor sales. Each of those factories will produce multiple millions of vehicles per year over the long run. Stage 1 of each I expect to be at least 500,000 vehicles per year. In other words, when the first stage of Austin and Berlin are ramped, we can effectively double this revenue number to $100+ billion, and that's not accounting for any additional capacity at Shanghai or Fremont. Things are about to get batshit insane. And in case anyone's wondering, I have Tesla doing almost $90 billion of revenue in 2022 in my bull case, and a mere $70.4 billion in my base case. And how long until Tesla 10x's their revenue in my base case? That happens in 2028, just over half a decade. And by 2031, in my base case, Tesla 20xing their revenue from where we are in 2021. And I want to emphasize, that's my base case. And just a reminder, if you want exclusive access to my Tesla valuation model, join Patreon at the investor support level and above with the card in the corner or the link in the pinned comment. That's where these numbers are coming from with all of my own assumptions. I'm not just pulling them out of my ass. So check the link in the pinned comment, join Patreon at the investor support level and above, and you'll see where I'm coming from. Next, we have Tesla quarterly deliveries by model and site. This includes existing data plus projections out to 2025. Just to give you guys reference for the color here, California in red, China in green, Texas in grey, and the Berlin factory in blue. You can see that James is expecting by 2025 Q4, Tesla's quarterly production globally to be about the same as their annual production was in 2021, a little over 900,000 units per quarter. This is an annual rate of production of less than 4 million vehicles per year. And for the record, I'm expecting Tesla to produce over 5 million vehicles in 2025, not an annualized rate of production at the end of the year, but actually to make 5 million plus vehicles in 2025 in my base case. Time will tell as to whether or not James is too conservative or I'm too optimistic, but James, between you and I and everyone watching, I've got a funny feeling I'm going to be closer to the mark. Next, we have a comparison, Model 3 sales versus Model Y sales by quarter. This includes data up to date, plus projections into the future. Model 3 in white, Model Y in grey. We can see at this point in time, Model 3 and Y sales are approximately equivalent. Obviously, Model Y over the longer term is going to sell many more units per year than Model 3. More people interested in a compact SUV than a sedan. It is what it is. The market's the market. Over the long term, James expecting the Model Y to be outselling the Model 3 by about 2 to 1. Personally, I think this is going to be a little bit higher than this, maybe even 3 to 1. The reason for this enormous increase in Model Y sales versus Model 3 is quite obvious. The first vehicle coming out of Austin, Model Y. First vehicle coming out of Berlin, also Model Y. And here, just quickly, we're looking at the expenses associated with Tesla's 2018 CEO Performance Award. This is something that many of the Tesla Q dum-dums also failed to understand. Tesla's quarterly profits were essentially taking a huge hit, especially around 2020, as Tesla, e.g. market cap and earnings per share, got closer to meeting those tranches. This temporarily negatively affecting Tesla's quarterly profits, but no longer having a material impact. Of course, it's possible that there'll be a new compensation plan. In fact, I think this is very likely, so stay tuned for that. But odds are this will not have a material impact on Tesla's earnings in the future because their revenue and their profits are going through the fucking roof, and this will be an irrelevant spec, even if it's quite substantial in terms of dollar amount. This is a great visualization showing how Tesla makes an average dollar of revenue, beginning at 2019 up to the present and then projections into the future. We can see at this point in time, roughly 80% of Tesla's revenue coming from automotive sales, not including regulatory credit sales, just a few percent from regulatory credit sales, an equivalent amount from automotive leasing, about twice as much from energy, batteries and solar, and approximately the same again from service and other. Obviously, over time, the regulatory credits in yellow fade away to practically nothing, much of the gap being filled in by automotive and strong growth in energy. And now, how Tesla spends its average dollar of revenue. Once again, we've got actuals towards the bottom of the chart and then projections into the future out to 2025. At this point in time, Tesla's spending about 62 cents out of every dollar on automotive, aka cost of sales. around 6 cents on energy, around 7 cents on service and other, a mere 4 cents on R&D, research and development. I just want to take a moment here. This is Tesla, the company with one of the world's leading AI teams, the world's leading manufacturing company, one of the world's leading software companies, the company that somehow finds the money to completely reinvent the battery cell, the 4680, embarrassing all of the existing battery manufacturers on Earth because Tesla's just a car company. All of that, everything Tesla's done in terms of R&D, new products, etc., their technology, that tiny speck, 4 cents out of every dollar. They're spending 4% of their revenues on R&D. That's it. Just 4%. This is probably less than General Motors paid the president to claim that they're the leader in EVs. Wait, did I say that out loud? No. Let's move on. In green here, we're looking at non-GAAP earnings, the money they don't spend. Already close to 20 cents out of every dollar at the end of 2021. Trend here pretty clear. I think James's estimates are reasonable, maybe a little bearish, but what matters more than the numbers and exact percents is the trend. Green goes up equals good. Tesla making more money quarter after quarter, less of their money being spent on automotive cost of sales. We're seeing economies of scale come into play here visually. R&D spending getting down to 1% by 2025. Keeping in mind, this isn't in absolute terms. This isn't a reduction in R&D spending. It's a reduction in relative R&D spending versus total revenues because Tesla's revenue is going to the fucking moon. In other words, it's pretty much going to be impossible for Tesla to keep spending the same percent of revenues on R&D because there's only so much money you can spend. In addition, Tesla is an extremely lean and resourceful company. They do more with less. This is why we see a huge increase in non-GAAP earnings. Tesla simply won't be able to spend all the money they're making. Next, Tesla's non-GAAP earnings per delivery, as in per vehicle delivery. The trend is quite clear. Just for the record here, for those of you that don't know, Tesla has a massive trick up their sleeve. They have $2 billion of deferred tax benefits, basically meaning that at any point in the future, when Tesla wants to, they can recognize that benefit, basically printing another $2 billion out of thin air. When Tesla chooses to recognize this is anyone's guess. James here assuming it happens in Q4 21, Q1, 2, and 3 of 2022, but who knows? Once again, the trend here is quite clear. In Q4 2018 and Q1 2019, negative GAAP earnings per vehicle delivered. This then turns positive, a few $100s per vehicle, then $1,000 or $2, then $4, $5, $6, and now we're at over $7,500 at the end of 2021. Next, adjusted EBITDA up to 2021 and then projections into the future. Trend is clear, even from the first 4 years here, 2018 to 2021. James expecting an extremely steep increase in the future. Obviously, I'm on the same page here again, beating the drum, but operating leverage, Tesla's continued expansion. The more vehicles they sell, the more money they make. Tesla today around 1 million vehicles per year, ultimately aiming to scale to 20 plus million vehicles by the end of this decade. Tesla 20x's their production over the next 10 years. It's more than likely that they're going to more than 20x their earnings. The more vehicles they make, the cheaper parts are to buy in bulk, the cheaper materials, the more they benefit from economies of scale, the more they can invest in certain equipment that doesn't make sense on low volumes of vehicle production, etc., etc. This is one of the most fascinating charts, well worth taking the time to understand what's going on here. We're looking at Tesla's average revenue per delivery in grey versus Tesla's automotive gross margin, excluding regulatory credits, in green as a percent of revenue. What we can see happening here in this chart, Tesla's average selling price for the vehicles, the average revenue per delivery, is falling relatively predictably over time. This makes a lot of sense. We're seeing the transition from predominantly Model S and X to Model 3, now Model Y, more people buying the lower price variants, blah, 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 blah. So it's expected, and over time, this will continue to happen. Remember, Tesla's planning to introduce a $25,000 vehicle. With inflation, it's probably going to be closer to $30,000, but that's going to sell many more units per year than the Model 3 and Y combined. Over time, we can expect Tesla's average selling price to steadily decline. Yet at the same time, Tesla is making more money. Their automotive margins over time are actually trending up. This is ultra impressive, and I'll explain why. Generally speaking, higher priced vehicles, luxury vehicles will have higher margins. This is why a company like Ferrari has industry-leading margins, although Tesla's right on their tail. We've seen Tesla's margins increase from the mid-teens now to 30-ish%. Practically doubling over the span of less than half a decade. This is due to innovations in manufacturing techniques, the gigapress, deleting many parts and processes, innovations like the new heat pump, the octo-valve solution, and a small contributing factor is also economies of scale. The more vehicles Tesla's producing, the more parts they're buying, the cheaper they are. But this is such an abnormal thing to see, especially in the automotive industry. The less you're selling vehicles for, the less fat you have in the actual price. $300,000 sports car has plenty of room for margin. It doesn't cost you 10 times as much money to make as a $30,000 vehicle. Customers are willing to pay a premium for the luxury features, the performance, etc. So you generally speaking will have higher margins at higher price points. The lower the price point, the lower the margins. The way this typically balances out in business, the cheaper your product, assuming it's compelling, the more people will buy it. So even though your margins shrink over time, the total profits can remain steady or increase as you sell more vehicles, just less profitably each. Tesla is completely bucking the trend here, and it's all due to their innovation in manufacturing and economies of scale. It's very likely that the next generation Tesla, the $25,000 compact, will have margins well in excess of 30%, approaching 40%. This sounds absolutely insane. This would mean that Tesla is producing their $25,000 vehicle for less than $18,000. Some may argue that Tesla's margins will shrink over time as their average selling price decreases. It's definitely possible, keeping in mind that electric vehicles are still a very new technology. The huge innovations and cost reductions have yet to take place, and nobody is producing them at massive scale yet. I want to take a quick moment to talk about Tesla's future vehicles, the average selling price, and margins. I expect over the long term, the base price for a Model 3 and Model Y will be around $35,000. It's possible this will be more, but let's just play along at home. Then I'm assuming that Tesla can have margins of at least 30% on these. What that means is it's effectively costing Tesla about $25,000 to produce the vehicle that they're selling for $35,000. I also believe that with continued innovation in manufacturing, deleting parts and processes, you guys know the spiel by now, in a year or two, Tesla is likely to release their $25,000 compact vehicle. This is likely to be a little bit smaller, more compact, meaning less materials going in as well. That's also going to help with cost reduction, and I expect this ultimately will have a 30+% margin too. We can ignore inflation, it's probably going to cost a little bit more than $25,000, but in order for Tesla to have about a 30% margin on this vehicle, they'd need to produce it for about $18,000. This is definitely possible. And I also believe, and this is featured in my Tesla valuation model, has been for months, remember, available exclusively on Patreon at the investor support level and above, card in corner, link in pinned comment. I'm also assuming that after the $25,000 Tesla, which I personally think should be called Tesla Q in honor of all those morons who lost their entire life savings betting against Tesla. This is, after all, the vehicle that kills the ICE industry and the last of the Tesla short sellers. I also believe in the later half of this decade, Tesla will have continued to drive the cost of producing electric vehicles down so much further that they'll be able to offer a vehicle priced around $18,000 to $20,000. This is a vehicle that Tesla would be producing for a cost of around $15,000. This may sound completely and utterly ridiculous, but I really want to stress EVs are a new technology. The innovation in manufacturing is only just getting started. When tens, hundreds of millions of electric vehicles have been produced, companies, mostly Tesla, will have figured out new ways to do a lot more with less. When Tesla's casting the entire front, rear, and battery of a vehicle in just 3 or 4 pieces, they've streamlined the body, continue to drive down costs, benefit from economies of scale, continue to innovate in thermal management, and so on. It's absolutely feasible that in the later half of this decade, Tesla's going to be producing compelling electric vehicles for around $15,000 that they can sell for around $18,000 to $20,000. For some additional context, for those of you who aren't familiar with Wright's law, effectively for every cumulative doubling in production, there is a predictable decline in the cost of a product. For example, in the legacy automotive industry with the internal combustion engine vehicle, every cumulative doubling in production has seen an approximate 15% cost reduction. Since EVs are a new technology, we're only just starting to see the benefits of these cost declines. Apart from a few aesthetic things, a little bit of window dressing, practically everything inside an electric vehicle is completely different to ICE. The core technology, the stuff that carries most of the cost, is completely different. We're approximately 4 doublings away from electric vehicles making up 100% of the new vehicle market. What does that look like in terms of potential cost reductions? Let's do the math. Basic numbers here, don't get your panties in a twist, just trying to illustrate a point. Let's assume that Tesla is selling the Model 3 for $35,000 at the base model. Assuming a 30% margin, that means it's costing them approximately $25,000 to produce. Let's just round it up, $25,000. If we use $25,000, and we shave 15% off that 4 times, we multiply that by 0.85, that's 1, 2, 3, and 4. In theory, when EVs are 100% of new vehicles produced, approximately the same size as the global auto market at its peak, could be costing as little as $13,000 to produce. Let's round that up to $15,000 to be a bit generous. We're not going to see those same cost declines on windscreen wipers and tires, for example. This paints a very clear path to a vehicle being sold toward the end of this decade for around $20,000 with a 30% margin. So I wanted to explain the reasoning behind why I think there's a $25,000 Tesla, and then after that a subsequent generation for around $20,000, maybe even a little bit less, that's still going to have these healthy margins. One final chart here from James to wrap things up. Tesla production and profitability. These are actuals plus a forecast for Q4. Tesla's variable costs in grey, Tesla's fixed cost in black, Tesla revenue in green, and vehicle deliveries in blue. The main thing to focus here on this chart, apart from the overall trend up, is the separation of revenue in green from costs, both fixed and variable, in grey and black. This is all on the back of Tesla's vehicle deliveries in blue. Over time, the more vehicles Tesla delivers, the more money they make, because as the name suggests, their fixed costs are fixed. Doesn't matter if they make additional vehicles, these costs remain fixed, they're flat. Tesla's operating expenses aren't scaling at the same rate of their revenue, their product sales, etc. Long story short, over time, we see more operating leverage come into play. The more Tesla scales their production, therefore their vehicle sales, the more profits they'll be making per year. Not just in dollar amount, but also in relative, in percentage terms. It's not long until Tesla is making many tens of billions of dollars of profits every single quarter. In fact, let's talk about exactly how long. In my Tesla valuation model, in the base case, I want to emphasize this isn't the bull case, this is the base case scenario. I have Tesla doing just over $100 billion in net income, aka profit, in 2026. 5 years time, just half a decade away. And just for context, my base case in 2022 has Tesla at just under $15 billion in net income. The point that I'm making here is quite simple. Thought Tesla was a money printing machine today, and just wait till Q4, it's going to blow everyone away. Wall Street's going to lose their fucking minds. Price targets to the moon. Tesla stock to the moon. In my opinion, not investment advice, do your own research, blah, fucking blah, blah, blah. Just wait until what happens in Q1, 2, 3, and 4 next year, and then in 23, 24, 25, and 26. And I'm sure some of you are going to want to know, so just for the record, in 2031, in my base case, I've got Tesla doing approximately $500 billion, with a T, trillion dollars in net income in my base case. I'm not joking. Like I said, there's a card in the corner, link in the description to join Patreon at the investor support level and above if you want access to my valuation model. That's where all these assumptions, which may sound insane, but they're probably going to age relatively well, are coming from. So I thought this was a great way to run through where Tesla is at, where they've been, and where they're going, including James's assumptions versus my own. In short, I have no question, Tesla is well on its way to becoming a $10 trillion company. The question is really just a matter of when. If I had to guess, actually, that's kind of what my price targets are, right? I'll read those now. In my bear case, I have Tesla exceeding a $10 trillion market cap in 2031. In my base case in 2027, and in my bull case in 2026. In other words, this would mean the price of Tesla stock exceeding $10,000 for the first time. And on that note, today I posted a new update to my Tesla price targets, base case, bear case, and the bull case, all the way out to 2031. So if you'd like exclusive access to those, join Patreon with the card in the corner, or the link in the pinned comment. My price targets are available to all Patreon supporters at all levels. So hope everyone's enjoyed this video, and I'll see you in the next one. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel, and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.